Karen Parkhill is back with us. She is the Medtronic CFO, as well as our Anjali Kamlani, who covers healthcare for us. Karen, thanks for being here. And it seems as though elective surgeries really was something that helped give you guys a lift in the quarter. Talk to me about how much that contributed to your numbers, because, of course, many of your devices are used in necessary operations and procedures as well.
Thanks, Julie. Yes, we had a really good, strong quarter, and it was a great start to our fiscal year. We saw continued progression throughout the quarter, each month getting better, including July better than June. And that was driven by the strength of procedures coming back, as well as the strength of our new product introductions that we had across many of our businesses. And we continued to gain share across many of our businesses, including our three largest, which are cardiac rhythm management that you mentioned, our spine business, and our surgical instrumentation business.
Karen, Anjali here. I wanted to know about how the company sees this sort of rise in interest, at least, with remote monitoring devices and generally medical devices. I know there's been a shift over the years from sort of inpatient to outpatient surgeries, and now it seems like the next step is forming thanks to the pandemic. Do you feel like the company is sort of positioned right and looking either through M&A or its own pipeline to sort of fit the bill?
Thanks, Anjali. We are very excited about what remote monitoring can do for our patients today and going forward, and we are investing heavily in that space. If you think about remote monitoring, particularly during the pandemic, we quickly instituted remote monitoring for our ventilators during the pandemic, and we're able to monitor those patients, not necessarily inside the room with the patient, but outside quite heavily. We also have insertable cardiac diagnostic monitors now that with our Link devices that can monitor the heartbeats and heart issues with patients 24/7. So we're really excited about what that can do for patients going forward.
And Karen, we're looking at the breakdown of revenue by the different units. I also want to talk about the breakdown of domestic versus international. You get just over half of your revenue, or at least you did this quarter, from the United States. As we see how COVID has been spreading around the globe at different times, what has that meant for the sort of cadence of your revenue growth around the globe?
Yeah, thanks, Julie. In terms of U.S. revenue, yes, it is over half of our revenue comes from the United States. And we are seeing the impact of the Delta variant currently right now. We saw it actually in the last couple of weeks of July, which was the end of our first quarter. And we're seeing that continue into August. You know, we're monitoring it closely, and we believe that the impact that this variant will have will be short-lived. We do believe that we'll recover quite quickly. We expect the infection rate to probably peak around August, the end of August or early September, and the ICU capacity and hospital bed capacity to get better a few weeks after that infection peak. And so we expect by the tail end of our second quarter, clearly improvement in procedure levels, and the back half of our fiscal year to be stronger than the first.
And Karen, if you could give me a little bit more color on that, because what I imagine is as we see ICUs, as you said, quite busy, particularly not just around the globe in certain places, but here in the U.S., particularly in the Southeast, I would imagine that you are seeing the effect that you saw at one time in the entire United States, people pushing off certain procedures. From what you saw then and a catch-up, is that what you expect to see again? And is that indeed what happened? In other words, did most of the procedures that people put off, did they end up starting to try to do them during the reprieve that we had in the spring going into the summer?
Yes, indeed, we did see a catch-up in the prior waves of COVID from that procedure volume. And we hope and expect that to happen here. And with each wave of COVID, the time frame between impact and catch-up has shortened because hospitals are better equipped to deal with patients. because vaccination rates have increased across this country and across the world. And because I think patients are learning to deal with COVID and get back into the hospital to have those important procedures that they need.
Karen, I want to pivot a little bit to what's going on in DC. There's a lot of conversation about generally the cost of healthcare. And in my conversation with hospital CEOs over the years, medical devices have come among the list of the most expensive things that they need to account for. I'm curious on your thoughts on this and whether or not you see sort of the industry needing to address this in any way, or have you had conversations, among the C-suite about this?
We clearly focus on pricing our products very appropriately. And in fact, it's embedded in our mission, that our mission says that we need to make a fair profit to continue in our innovation and to meet our obligations. It doesn't say to maximize profit, it says to make a fair profit. And when we think about the prices of our devices, these are important life-saving devices that help improve outcomes. And with those improvements in outcomes, we are focused on driving the total cost of healthcare down because our devices do just that. They reduce infection rates in certain cases. They reduce other complications. And as a result, the total cost of healthcare comes down because of our devices.
And Karen, something else I noticed in your forecast from this morning, and I apologize because in prepping for the show, I didn't have a chance to listen to the call, so perhaps this was addressed. You guys raised the lower end of your earnings per share forecast. You didn't raise your revenue forecast for the full year. And so I'm wondering where that upside is coming from, especially, and I know that healthcare costs for input costs for you guys, as well as prices, have been rising pretty steadily even before the pandemic. The rest of the world is sort of catching up at this point. But I am curious where that lever came from that allowed you to raise that EPS forecast without raising the revenue forecast.
Yeah. So we had a really strong first quarter where we beat consensus on the bottom line by 9 cents. And that gave us confidence to increase the lower end of our EPS range for guidance for the full year. We're still really confident in our ability to deliver 9% plus or minus growth for the full year. We do believe that we're being impacted this quarter, obviously, from the Delta variant of COVID. And it's still really early in our fiscal year. We just finished one quarter. So it'd be unusual for us to raise our revenue guidance after one quarter. And you put the Delta variant on top of that. That's why we didn't raise. But we also said that our guidance did assume that we don't necessarily make back all of the procedures that we might lose during Delta variant. We certainly hope that we do, and past experience would show that we do. But that just shows you that we're taking a really conservative stance with our revenue guidance of 9 plus or minus percent for the year.
Got it. Copy that. Well, let's hope that the recovery from that Delta variant will indeed be as compressed as you said, and we're all hoping for it. Karen Parkhill, good to catch up with you again, Medtronic CFO and our Anjali Kamlani. Thanks, Karen. Be well.